Many people have put their taxes on the back burner, but they must be signed, sealed, and in the mail. April 15th is on the way.
Time is ticking, no question about it. Here with some tips is Jason Vino, a local investment advisor. Good to see you. We appreciate you coming in. If you have questions about taxes, you can give us a call right now. The number's at the bottom of your screen, a local number and an 800 number. What should people be doing right now to try to get ready, Jason, for, April 15th? Here we are.
Well, I think one thing is we need to admit that we're all somewhat of procrastinators when it comes to our taxes. People really need to take the time and find out what laws are in our favor, what deductions do I have, what credits do I have, should I contribute more to my tax-deductible IRAs and retirement accounts. It's been said before, the opposite of progress when it comes to taxes is sometimes Congress. A lot of people feel the IRS and the government do not give them the tax benefits that they should have, but what people don't do is take advantage of what is out there. So talk with your accountants. Really take a look at and research what is available for your situation.
So there still are things you could do now. I mean, like if you can contribute to an IRA that might be able to impact this year's.
Absolutely. A lot of people don't realize that the IRAs, you can still contribute up to $3,000 up until the time that you file. So if you haven't done that, take a look at if that's the best situation for you to do.
We keep hearing that a lot of people's investments have lost money over the last couple of years. Is there anything special that those individuals could consider doing now that would help them with taxes?
That's a great question. A lot of people have lost value in their accounts. They get their statements, they set it aside, and they don't even take a look at it. But there's two things that people need to really consider selling these accounts for. One, they may actually have what's called a capital loss. If the value has dropped below the amount of what they paid for the investment, they can actually deduct that from their taxes or use that against something else that they made a profit on. Also, if these accounts are going to make a profit going into the future, now's a good time to maybe transfer into an account that gives them tax benefits.
All right, David from Lexington is on the line with a question for Jason. Hello, David.
Hello, how are you?
We're doing fine, thank you. What's your question?
Well, I was given a block of stocks in 1998, and this past year sold 100 share blocks of them. And I don't have a baseline. This came from my mother, who is Alzheimer's and in a nursing home. And I don't know when they bought the stocks, what they paid for them, or anything else. And I need to know what I need to do to claim that capital gains loss, whatever it may be.
Okay, good question. What he's asking is, I don't have an exact price of when this was purchased or what it was purchased at. And a lot of people have that problem. The best thing you can do is, one, talk with your accountant and find out what he suggests. But two, maybe go back around the time period when you think it was purchased, find out what an average price was for that time, and use that as a guideline on what to base your cost basis of the price that it was at.
Jason, what about individuals who are currently receiving income from their investments or Social Security?
Right. People receive income from all different places, especially in retirement. IRAs, pensions, CDs, mutual funds, annuities, etc. People don't realize that each of these income streams are taxed differently depending on where they come from. So the first thing they need to do is understand, how is it taxed and how does it affect my situation? For an example, Social Security tax is based on the amount of income that comes from CDs, mutual funds, and other places that are in taxable investments. The more income you have from these areas, the more tax you may have to pay. However, income from IRAs and from annuities do not count against this level. So if all your income is coming from an IRA or an annuity, you may not have to pay any taxes on your Social Security.
If you really want to impact next year, and that's when you can really make a difference, what are a couple things you can do?
Well, like I said earlier, you need to first find out, do I have a retirement plan in place? A lot of small business owners, they don't like paying taxes, but they don't have a basic retirement plan in place where they can take money from the taxes and deduct that into future retirement savings. What vehicles will allow them to do that? And
where can people reach you?
We're located downtown, and we are at 231-6622.
All right, Jason Vino.
Thank you.
We thank you for coming in. Appreciate it very much.